Hello everyone. Welcome to the Stock Minds web channel. In an era of market volatility and rising investor uncertainty, Charles Schwab, NYSE, SCHW, delivered an impressive Q1 2025 earnings report that showcased both strong growth and attractive value. With robust revenue and earnings per share, EPS gains, solid margins, and prudent capital deployment, Schwab demonstrated its resilience and upward trajectory. In this video, we will dive into Charles Schwab recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Charles Schwab. Founded in 1971 in San Francisco by Charles R. Schwab, the Charles Schwab Corporation is now one of the largest U.S. financial services firms. Headquartered in Westlake, Texas, it offers brokerage, banking, wealth and asset management, custody, and advisory services via its two main business units, Investor Services and Advisor Services. The company's full TD Ameritrade integration in mid-2024 cemented its leadership with a combined client base and $10+ trillion in assets under management. Charles Schwab financial performance. Charles Schwab delivered another strong quarter in Q1 2025, showcasing solid year-over-year growth and healthy profitability across its key financial metrics. The company reported revenue of $5.59 billion, an 18.12% increase compared to $4.74 billion in Q1 2024. Earnings per share (EPS) for the quarter reached 99 cents, marking a 45.36% jump from 68 cents a year earlier. On a trailing 12-month TTM basis, revenue rose 10.85% to $20.46 billion, up from $18.46 billion in the prior year. TTM EPS climbed 38.63% to $3.30, while free cash flow per share increased 25.65% to $5.34, compared to $4.25 in Q1 2024. Schwab continues to demonstrate exceptional profitability and efficiency, with a gross profit margin of 97.05%, net profit margin of 31.71%, and a robust free cash flow margin of 47.84%. Additionally, the company posted a return on assets of 1.39% and a healthy return on equity of 14.12%, supported by a prudent debt-to-equity ratio of 1.1. Over the past 5 years, Charles Schwab has grown its revenue at a 14.1% CAGR, net income at 17.4%, and free cash flow, while fluctuating, has still grown at 11.3%. Charles Schwab continues to grow and recover from the downturn in 2023. Charles Schwab Fiscal 2025 Financial Forecast. Looking ahead, analysts remain optimistic about Schwab's growth trajectory. Revenue for 2025 is forecast to reach $22.58 billion, representing a 15.16% increase over 2024's $19.6 billion, while non-GAAP EPS is expected to grow 32.89% to $4.22, up from $3.25 in 2024. The stock carries a buy rating from analysts, with an average price target of $91.32, offering a potential upside of 3.48% and a high-end target of $113, implying an attractive upside of 23.76%. This consistent and broad-based growth highlights Schwab's strong operational execution and promising outlook for the remainder of 2025. SCHW stock price performance and valuation. At the time this video was created, the stock price was trading at $88.25. Charles Schwab stock had gained 18.86% over the past 12 months, handily beating the S&P 500's 12.06% gain during the same period. The stock's long-term performance is equally strong. Over the past 5 years, Schwab has surged 141.3%, once again outperforming the S&P 500's 96.9% rise. In addition to capital appreciation, Schwab offers a dividend yield of 1.22%, providing investors with additional return. From a valuation perspective, The stock trades at a price-to-sales (PS) ratio of 7.87 on a trailing 12-month TTM basis, with a forward PS of 7.1. The non-GAAP PE ratio currently stands at 24.86, with a forward PE of 20.43, suggesting the stock is reasonably valued given its earnings momentum and robust margins. Moreover, Schwab's price-to-free cash flow (PFCF) ratio is 16.38, which appears attractive when considering its 47.84% free cash flow margin and growing cash generation. Based on FinChat data, if we look at the valuation over the past 5 years, Charles Schwab's forward PS is trading above the average, while the forward PE is still in line with the average. This suggests that Charles Schwab's stock still has potential upside if the market assigns a higher premium valuation to the stock. Charles Schwab growth potential. Charles Schwab prospect remains robust, driven by several factors. 1. Multi-product monetization strategy. Charles Schwab's 18% revenue growth to $5.6 billion in Q1 2025 was driven by a well-balanced multi-product monetization strategy across its business lines. Asset management fees grew alongside rising assets under management, especially in higher margin managed accounts. Trading revenue increased 11% quarter-over-quarter, fueled by heightened market volatility that boosted daily average trading volumes. Despite recent rate cuts, net interest income remained resilient, supported by stable margin loan balances of $83.6 billion and a strategic reduction in high-cost funding. CFO Mike Verdeschi highlighted that this diversified revenue mix allows Schwab to convert organic growth into sustainable profitability, regardless of market fluctuations. By effectively monetizing both transactional and recurring revenue streams, Schwab has established a strong competitive advantage that helps mitigate the impact of industry cyclicality and ensures consistent financial performance. 2. Unparalleled asset gathering capabilities. Schwab's core net new assets of $137.7 billion in Q1 2025 represent the highest quarterly inflow since 2021, translating to a 5.5% annualized organic growth rate across its $9.93 trillion client asset base. Retail investors opened 1.2 million new brokerage accounts, 8% year-over-year growth, expanding Schwab's active account base to 37 million households. The firm's automated advisory platforms and personalized portfolio strategies generated 15% year-over-year growth in net inflows, a quarterly record as clients increasingly adopted hybrid human-digital advice models. This segment's outperformance suggests Schwab is effectively competing against fintech disruptors by combining algorithmic efficiency with human expertise. President and CEO Rick Wurster attributed this success to Schwab's unwavering focus on serving clients across all channels, particularly during a quarter marked by renewed market volatility that prompted investors to seek stable partners. 3. Liquidity and capital management. In Q1 2025, Charles Schwab significantly reduced its reliance on short-term borrowings by $11.8 billion, continuing a trend that has lowered its bank supplemental funding by 46% compared to Q1 2024. This deleveraging occurred alongside a 9% year-over-year increase in total client assets to $9.93 trillion, highlighting Schwab's ability to support growth organically without expanding its balance sheet. Capital ratios across the firm continued to strengthen, including preliminary consolidated Tier 1 leverage and adjusted Tier 1 leverage reaching 9.9% and 7.1% respectively. This provides ample capacity for strategic investments in technology and acquisitions. The robust capital position enables Schwab to pursue consolidation opportunities within the fragmented wealth management industry, reinforcing its long-term growth and competitive positioning. Risks to consider. While Charles Schwab's outlook is compelling, we should beware of several risks. 1. Competition in brokerage services. Charles Schwab faces fierce competition from low-cost brokers like Robinhood and Fidelity, pressuring margins as commission-free trading becomes standard. Its app, less intuitive for novice investors compared to rivals, may hinder market share growth. Despite its scale and diversified services, Schwab must innovate to retain and attract clients in a crowded brokerage market where user experience and cost efficiency are critical for maintaining a competitive edge. 2. Interest rate risk. Interest rates are a key driver of Schwab's earnings. The company's investment portfolio is subject to reinvestment risk, where a decline in long-term interest rates could reduce earnings. A prolonged low-interest rate environment, similar to scenarios in Europe or Japan, would significantly reduce profitability and might necessitate changes to Schwab's business model. Conversely, while higher interest rates can boost net interest income, NII, they also increase unrealized losses on fixed income securities, adding volatility to earnings. 3. Debt, financing, and market liquidity risks. Problems in the broader financial sector, such as failures or credit concerns of other financial institutions, can disrupt financial markets and negatively impact Schwab's financial position and reputation. Such events may increase borrowing costs, reduce liquidity, and prompt regulatory changes, including higher capital or liquidity requirements. The 2023 U.S. bank failures led to heightened regulatory scrutiny and increased FDIC costs for Schwab, which could materially affect profitability. Conclusion: Charles Schwab continues to demonstrate a compelling blend of strong growth and attractive value. The company delivered excellent Q1 2025 results, with double-digit gains in revenue, earnings, and free cash flow, supported by industry-leading profit margins and returns. While risks such as competition and market volatility headwinds remain, Schwab's diversified business model, strong balance sheet, and proven execution provide resilience. But remember, this is not a financial advice. What do you think about Charles Schwab? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.